The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi, everyone. Basil Chapman, Tiger Technicians Hour. And what a great thing 3 minutes before you're about to do the show is to see Comcast trucks all over the show. And the next thing you know, it says power out. And thank goodness in this business you have to have backups of all sorts. So we're on backup right now. So I'm getting live charts one way, but my, my major source of charts, my trade station charts, are not showing right now. But we'll go through everything as we're looking at it. So we're looking at the, let me do this. Let's see if I've got the Dow. I'm going to move everything around. Forgive me. I'm going to take a moment. All right. So what we're looking at here is that the Dow, the last I looked, was up 12 points at 19,899. S&P up about 2 at 2271. I want to go through a couple of things that I'm able to get very easily here. I wonder if I can put Dow right here and get it. Is that Dow? That's Dow Chemical. All right, so let's do what I've got right now. Move things away a little bit. I'm using TC 2000, and can I do? Okay, here we go. One of the things that I've been looking at here is this cup formation in the Dow. It's like a V-shaped formation on the 20th of December. The high was 19,987. 3 days ago, we just missed breaking to 20,000 by a fraction. We went to 19,999. Well, that creates a couple of things. It creates a pattern that looks either like a U or a V, going from one level down for about 8 bars, and then up for about 6, 7 bars. Makes the new recovery high, but cannot hold it. But what that did in the monthly chart is it went to a new all-time high. And the stochastic and the MACD in the Dow's monthly chart is still very positive. So as I'm looking at this, I'm saying to myself, over the period of the last 5 sessions, we've seen the New York Stock Exchange. I wonder if I can get that right now. NYA, I'm using different systems, but I do want to see if I can get it right there. The New York Stock Exchange was acting quite well, but it went to a new all-time high, and it's pulled back. The QQQs were showing the most strength, and the QQQs right now, well, I shouldn't say right now, just as of a few minutes ago, were trading at up 10 cents at 122.43. The high of yesterday, and I'm calling this, at least for now, it's a very unusual pattern. I had a question yesterday. I never had a chance to get to it because there were questions coming in from listeners, so I wasn't able to get to it. And the question is, what's happening in the QQQs? That's the Nasdaq Power Shares QQQ Trust Series. Well, if you go to that, let me put the chart. This is updated here, 1, 2, 3, and it's trading at 122.73, up 40 cents. So now what we're looking at 122.73 is it's extended yesterday's leg D, and I'm calling it a leg D for now. But in fact, I so wish that I was doing live. I'll do it again tomorrow live because I want to show you there's a pattern in the Chapman Wave methodology. It's a derivative of a pattern that I called the Eastern wheat chart. It is what I call the unconventional wheat chart. And I'll show it to you here. I'll be pointing here, but this hasn't got rid of my user chart. So black background with a green notation. And basically what we're looking at is the move from this low right here. You're going peak A, B, C, D. However, within the context of it being A, B, C, D, this is very unusual because I use something that I call the instant restart, and that says that within the context, this pullback that we went to right here on the, I forgot dates here, on the 3rd of January to a low of 118.89 in the QQQ, says that at some point within the next 2 to 3 weeks, there should be a price pullback that takes out that low. So that's a scenario that I want to just mention. But if I'm looking at the weekly chart, so far the weekly chart is very positive. So I'm going to step aside and just say there is nothing negative right at this particular moment in the QQQ series. What is very important is that when you're looking at the IWM, the IWM is trading up $1.05, up 0.78%, hasn't taken out the high that it has to take out, which is the high of the 9th of December of 138.82, and it's really gone sideways. These sideways high-level consolidations can take a while to unfold, and very often what happens is it will suddenly spike towards the previous highs, and I've called this as a pattern that I'm going to be talking about tonight. What a pity I can't be talking about it right now, but I will. The webinar I'm doing tonight, the third one in my webinar series, on easy techniques within the Chapman Wave methodology that you can use, shows a particular pattern that says if there's a failure just below the previous high, and the previous high was peak C, you could call that peak C1 and the new one peak C2, which is essentially a proxy for a pullback as if it was a peak D. Well, now we've made a peak C2, C1, C2, and C3. Right here, this little peak right there, that's a peak C3. And that's saying that there's a tremendous amount of resistance. You're making slightly lower highs and slightly lower lows. The IWM is one of the weaker indices at this particular point. If you look at gold, GLD, the Spider Gold Trust, it made a leg C this morning. It went to a higher high. Let me put it into this chart right here, GLD. And as a result, it is now above the 9-period moving average in the weekly chart. This is so fantastic because what we want to do tonight in my webinar, the third of this webinar series, is to discuss time frames, how the 120-minute chart bumping into the 200-period moving average resistance is telling us that it's actually acting as a magnet, and you can see that magnet exemplified by the 9-period moving average in the weekly chart, and that's going to be very important. So we're going to be talking about time frames, how 120, a shorter term can lead you to the next term. So this is the shorter term is the 120, goes to the daily goes to the weekly. And that's how you can stay in positions for a while. I'll talk about one of those when we get back. Basil Chapman remotely talking from his backup system. And I'll be right back. We'll be right back straight after these important messages. I'll see if I can get my program working a little bit better.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman working from a remote machine looking at this man right up here on the pole. Comcast, redoing something. As long as it's going to be better, I don't mind. And the guy's out there in 15-degree weather. I got to, hey, congratulations to you, mister. I couldn't do it. Okay, question Rick had, and Rick couldn't hold on, but Rick wanted to know about IBB. IBB trading at $2.85 right now. It's up $1.10, up 0.39%. This is leg D. Now, one of the reasons why we have, for my subscribers, we have one of the biotechs, the Valiant Pharmaceuticals VRX, which I used. I wish I could show it right now. I used it as a proxy for, I'm not even sure it's in the biotech IBB, but I used it as a proxy as a stock that had been battered, hammered, had gone down from the 110 area down to the 13s, and why there were many parts of it that looked very attractive in terms of a trade. And I used it for, since I started my webinar series. We've been using certain stocks, GDX, gold stock, GDX is gold miners, and VRX is one of those. And I used it because it had all the characteristics that I like to look for and that I could demonstrate as techniques that we like to use. Stochastic, turning up from the under the teens, going to the teens and going to the 20% and above level, the MACD, the moving average crossing positive, the price itself going from peak A to peak B, etc. Those are all the characteristics. Well, I had an email this morning, if I can find it. I'm not sure if anything's working. Let me see. No, that's not working, but I can try to find the email. And let me see if I can get it. Where was it? From Greg saying, "Good morning. Sorry for earlier email. You may have already seen news VRX. Positive results in phase 3. Thank you, Greg in Austin. P.S. Positive results for subscribers." So what I said to subscribers this morning, because we had bought it at 14, I can't remember exactly. I should remember. Let me see. I think it was 1487. Yeah, 1487. And what I said was, this is a very important phase because we're expecting leg D, and D should be in the 1750 area, way higher. And I didn't expect that it could do it, but I did it this morning. It has $17.50. It's now pulled back because of the news. I said to subscribers, take something off. If you're a swing trader, take something off. We want to hold it. And the only reason I wanted to hold it is because I wanted to be able to demonstrate to subscribers and to the attendees of my course that the weekly chart is now improving And we want to learn how to use the 120-minute chart that goes to the daily chart, that goes to the weekly chart as a proxy for time frame use. So we'll see if that's going to pan out. Well, the close yesterday was $15.35. The high today is $17.55. The high that we were looking for was $17.59, so 59 to 17.65. So it almost got to that area, but it did it in exactly a left side, right side price time frame using the plumb line of the 15th of December as the fulcrum. Same number of bars to the left as to the right in the price match that we were looking for. So now let's go back to the IBB, because the IBB has some of those characteristics, except that the IBB was forming a pattern that I call the arch formation that can go to a lowercase h that turns into a lowercase m. Within that, the question then becomes, will the price break out above the previous arch high and then target the very next level of importance? On the upside, it could be a peak. It could even be a moving average. The 200-period moving average of the IBB was 280.01. And then the peak that we'd be looking for was 285.62 on the 25th of November. Now, we did not have a position, although I did say I now like the IBB, and that's why we want to use something in the whole pharmaceutical biotech area as a proxy, and that's why we're using what we're using. And now what we've got is a stock index, an ETF, the iShares Biotech NASDAQ IBB at 284.39, at 2, let me go back again, IBB, at 285.55, up $1.16, in leg D, and the high of the day, I wonder if I can actually do that here. Yeah, I can see the high of the day. Can I? Where do I find it? That's interesting. Oh, there it is. High of the day is 286.99, and we were looking for, I actually didn't mention it, I was looking for 286 as the next level of resistance if it broke the 200-period moving average of 288.20. And so it's not yet there. So this is very interesting, because if you look at the weekly chart, all we're looking at is a series of H patterns. And if you're looking at the monthly chart, I still anticipate at some point it's going to break down. But this is a very important counter-trend move. Why do I call it counter-trend? Because the larger bias based on the technicals is pointing lower. And I suspect that there should be some kind of a pullback coming within another 3 to 4 sessions in the IBB. So, Rick, if you're long, I would stay long, except I would recommend doing one of two things. One is either you take off part of your position right here, maybe a third of your position, and then have another third at 285. Oh, that is almost updated because it only went out. The 85 round number I had, I think it went above that, right? So then I would have a stop on some part of your position at about 281 to 280, somewhere there. Now, is that the place to be putting it back, or is that the place to be taking it off? So two things are going on. One is, if you take something off right here, 281 to 280 is where you want to make some kind of a decision. Are the technicals starting to fail? Because if the technicals are failing and it's not supporting the price, you don't want to put anything back again. If, in fact, it pulls back and it holds for 2 out of 3 sessions, and really closes above 280.01 on any pullback towards the 281 level, then I'm going to say to you, hey, that's pretty good action. So that part A is to take something off now, and then at 281 to 280, you think about, am I going to take more off, or am I going to put that back because it wants to go to the 289, 290 area? That's part A. Then there's another part to this, and the other part says, hey, it's acting so well, keep your position, because even if there's a gap down on any really bad news, is it going to give back 5 points? Yeah, maybe it'll give back 5 points, and then you're back to that 281, 280 level that we were talking about. But if it doesn't do that, and it just keeps very quietly, because this is one of the leading indexes. Before it was the worst, now it's one of the leading ones. If it keeps moving higher, you want to keep your core position. And in that case, this is part B, I would then say make a mental stop. You can make it physical, but keep it more as a mental stop. At 282, we want to monitor what is the opening today. The opening was 282.16. So at 282, you want to reassess. So congratulations if you are holding. If you're looking to short, don't think about it just yet. You need another couple of characteristics to come in before you can start thinking about shorting the IBB. I'll be back, Basil Chapman, Tiger Technicians Hour, doing it remotely, having to wait about another hour before Comcast finishes their work outside. So I'm using the variety.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So, as I say, I'm doing this remotely, and at this particular point, the DIA, I can't even remember what the Dow is. I think it's dollar Dow, dollar DJA. All right. Well, the diamond's up 39 cents, and that's going to be very important because there, you can see this pattern even in this little microcosm here. That's a high-level consolidation, and it hasn't broken down yet, but it hasn't broken out to the upside. Very often these patterns start to make lower lows and lower highs, and that's something we have to monitor really closely. There are a couple of signs of strength. You've got the semiconductor index, SMH. The SMHs, the semis are up 39 cents at 73.16. My bias right now is to think of them more as starting to fail, that the semis are going to fail. But if there is a move that takes it above 74.35 in the next week without taking out 71, 2 points up instead of 2 points down, I'm going to have to say that we're going to go right through the 20,000 very easily. And one of the reasons why I say that is because we haven't broken down from the 19,900s yet. Yeah, we've slipped under it, but we haven't taken out the key 19,800 to 19,750 area. That's support. If that support goes at any point very soon, that's going to suggest that this timeout is going to be very choppy, maybe limited upside. I wouldn't even be surprised if fairly limited downside. Just too many people have missed getting along this market. I'm suspecting that there's going to be tremendous support. It'll have to be really bad news. And that's the other thing. The volatility index, I wonder if I can find the VIX here. Would it be dollar VIX? Let me just check it out. VIX. Oh, there it is. Okay. VIX. The VIX trading at 11.33, down 24 cents. Yeah, that's just saying there's still some buying pressure. And if I'm looking at 82, so there we go, down 23. Yeah, if I'm looking at this in terms of volatility index, the volatility index is suggesting that there is still quite a bit of buying pressure. Now, the buying pressure hasn't shown up with the market spiraling to the upside. It's acted more as support, and that's very important. The TLT down 3 cents at this particular point. I really would say to you that 120.20 to 120.20, try and do this by memory, but 119.70. That's the key support level. The TBT, which is the inverse of the TLT, that TLT is the Lehman 20-year T1 fund. The TLT-BT is the inverse, and it's trading at 39.04, up 6 cents, and it's gone to a peak A, B. I can't remember. I think this is a C. Hasn't gone to a D. Am I correct? Oh, I don't know how to do this right now, 35.04. I think it's in a peak C. No, is that a... No. Oh, wait a minute. I've got it right here. I think I can find it on this one. I'm so used to my chart. Yeah, made a peak D. Made a peak E, the TBT, and has come down all the way. I did that upside down. Oh, the TBT isn't... Wait a minute. Something's wrong here. I've got the TBT at 39.09. Having tested, that should have been rallying. Oh, it isn't updated. That's right. TBT this is updated. The other one isn't because I haven't looked at it for a little while. And this is suggesting that there's just a little bit of a pullback here. We're going to be watching this. I said that our four horsemen, VIXI, Bondi, Goldie, and VIXI. Let me do it again. VIXI, Bondi, Goldie, and Dolly. And the dollar. Oh, I haven't even looked at the dollar right now. Wonder if I can get the dollar on this. DXY. I think so. Yeah, 101.84. The dollar's down 36 cents. And gold. Can I get gold? I'd like to get the gold contract. Gold contract. Let me see if I can go GC. I don't think so. Oh, no, I can't. All right, I'm not sure. Oh, gold. Let me just put in gold. Gold. Double. No, toil and trouble. No, I can't find it. Gold. I've got all these different golds. So, let's go to the HUI. The HUI trading up 76 cents. Nice action. And up 0.38. Yeah, that is nice action. Now, how can I compare these legs to the upside? This is leg B. Leg B before failed, and leg A failed earlier on, back in September of last year. Is this different? Is this a move in gold that is suggesting that we're looking at a situation where gold has become in play, and as a result, we are looking at some kind of an inflationary hedge with gold? We've got to look at it that way, because that's the only reason why gold could be running right now, because the dollar has been holding very, very well. So they're not actually working inversely. So, yeah, peak, I can see the density. If you've got a question, AAPL, I'm not sure if that's a question here. Apple, let's look at Apple, AAPL. Apple is up 21 cents. Now, this is going to be very interesting. Apple has succeeded in rallying very sharply away from the 90 level. The highs that were made back in the 130, was that 130, 130.57 was the high back on the 4th of May. Well, that's quite a move from the 130 down to the 90 level, back to 119.19. And I must say that the way I've been discussing Apple for quite some time is that I look at Apple as if it's the old General Motors back in the 30s, 40s. It's in that break. It's in the era of cutting-edge technology and then putting it to work in products. And that's basically what I'm looking at in Apple. So, yes, it gives you some dividend, but it's the same question within the context of markets. I think that Apple is a very strong, solid play. Is it a leader? I don't think it's a leader, but it is definitely in the forefront of the major companies that we're looking at. And that's really this next phase that I'm thinking of that we're going into will be a phase where leaders like Amazon's taking a breather, Google's taking a breather, but I suspect in the next phase, they will be the ones that if we go to what I call a mega move in the market later in 2017, I think they're going to be participants, and that's going to be very interesting. So I had a question again about cyber. Stock I almost put on as a buy this morning, never did. Let me go to cyber right here, and there were a couple of reasons why. It's trading up 81 cents at $1.63. I just wasn't sure. What did it close at yesterday? Yesterday it closed at CYBR. Looking at it close yesterday of open, high, low, loss. So that was 50.53. How could that be? Yes, 50.53, and the low today is, was that yesterday? So yesterday, let me do that. I'm not used to this right now. So the close yesterday was 47.66, and the high today, hey, that can't be that. All right, cyber acting very well right now. It's up 81 cents. Yes, I think if you are long it, stay long. I would put a stop on some part of my position at about 49 to 48.50. I'll be right back. Basil Chapman, and I can't even tell you what the Dow is right now. I do have the numbers somewhere, but I can't see them.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, two 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hey folks, we're back. Basil Chapman. So now I'm going to tell you what the Dow is. The Dow is up 47 at 90,934. The S&P, let me see if SPX, there it is. Standard & Poor's S&P up 7.43 at 2276. Did that take out the high? Let's see, 2277.53, 2282, yes, very nice. Good action, I must say, good action, yeah. Here's the other thing that I wanted to look at. Within the context of, I needed to look at, IYT. IYT, which is the transportation index, up at 195. That's good, but it needs to break above 169.43, the high of Friday, the 12th of December. And so far, this is going to be a heads up to say the upside is still bumping into a lot of resistance. But most importantly, let's look at the XLF because we want to see what the financials are doing. Only up 17 cents, hasn't taken out the previous high. Let's look at Goldman Sachs. Goldman Sachs down 68 cents. So I'm getting a sense here that within the context of the markets, the high-level rotational, very select movement to the upside that I was talking about yesterday and the day before and Friday is still ongoing. And therefore, let's look at GE. Is GE up? It's up 8 cents. That's good, but it's not great. It's at 31.54. It's kind of stuck in a range. Let's look at General Motors, because General Motors had a spectacular move to the upside in a single day and gave most of it back. Today it's up 50 cents. Hey, that's now holding in a nice area. Let's look at FCAU. FCAU is, oh my goodness, up 17 cents. This is Fiat Chrysler. Oh my, what a move. It's gone from under 6 to where it is right now at 10.74. What a spectacular move, going straight into that huge resistance area from October at 1089, going all the way back to March of 2015 at 11. This is a spectacular, almost a straight-up move since the November election. It has just been a monster to the upside. Very good. And what's so interesting is Consumer Report gives Fiat and Chrysler lousy marks, but people are loving them. Everywhere I look, people are, especially around here, of course, people are buying the Fiats and buying the Jeeps. And, all right. So Walmart is a stock that I wanted to also look at because it is in that retail area that's starting to fail. It's at 68.94, making the arch formation. If I look at the RTH index, which is the retail, this is the commercial retail area, 76.90. At this particular point, I think it's unchanged or something. Let me just check it out. Yeah, it's up 14 cents. It is just stuck. And it represents what we're looking at because if I spoke to you before about Amazon. Amazon's come back very nicely, but it's still in this very high-level consolidation. Is it going to turn into something that is really telling us more a story about, what can I call it? A story about the two markets, the retail market and the online market. And within that context, XRT is also pulling back, and that has some of the other retailers and a lot of clothing stores. So we're going to be looking is the IYR. That's the REITs. This is the commercial REITs, down 35 cents at 77.54. Is that going to be stuck? Are we going to be looking at 2 or 3 markets? Are we looking at, the question was, cyber acting quite nicely up, 87 cents, still stuck in a range. But are we looking at markets where certain sectors are kind of done for, at least for now, and that there are other stocks that are holding the market up, but they're very select? I'm not sure I can get to crude oil. I'm not sure how to get to crude oil, so I'm going to go to USO for now. The USO is trading at 11.24, down 7 cents. Also kind of stuck within that range. Remember, I said crude oil is probably stuck between, what did I say, 49 support and 55s as the high. Just kind of 51, 55, just kind of trapped within that range. So this is going to be very important. How does this market resolve itself over the coming few weeks? How do we go into the end of January, the beginning of February? That's basically when the quarter really is going to start, because some of the trends will be known. The leadership roles will be taken. Efforts will be taken within the first week of the new presidency to do things. And we're going to see how the market responds. So I'm going to do this one more time. Go to the VIX index, I can't remember what it was, VIX, don't often use this, VIX, COB, volatility index down 17 cents at 11.38. So let me make it real clear. Within the context of what I look at for market direction, the volatility index under the teens, in the 12s and 11s, that really is a way of giving support to the market. If it doesn't turn into buying pressure, at least it contains the market, it gives it support. The moment it starts to go into the 13s, especially the high 13s, you've got to expect intraday some triple-digit declines. We haven't seen that yet because there are just, I think I'm going to say it over and over and over, there are just too many people that are way too either short or they aren't long enough, and they are wanting to get in. And I think that is going to give very good support to the markets on any pullback. Now, what pertains to markets' relentless decline? It's bad news. So the market has factored in for at least a little while now higher rates. It said, you know what, we've got higher rates. That's number one. Number two, what it's saying is, within the context of the markets, the fear factor could come in when it comes to, say, passing the new appointees. So maybe the market's going to be upset if something happens. But at this particular point right now, we don't have the bad news filtering throughout the markets. We don't have international bad news in the markets. And that's really what sustains down moves of at least consequence. And we don't have it. That's the reason why I don't want to get overly bearish right now. At the same time, very cautiously bullish. We have bullish positions, and we have very select bullish positions. And that's the way I want to deal with it. I feel quite comfortable with that. Now, I also wanted to look at, within the context of the markets, I want to look at certain stocks like an IBM, down $1.12. So now let's look at the XLK, because the XLK is the title of the XLK, I think, is the Select Technology ETF, I believe. I think so, yes. And it's trading up 17 cents. And is that a new record there? 49.56. Yeah, I think it is. So that's saying that there's still enough stocks within the high-tech sector that are doing very well. So I want to just review. We'll do that when we get back. I apologize for not having my full setup. I'm very lucky to have the backup so that I can look at charts and do this with you. Don't forget my webinar tonight. We put everything together, time frame, looking at trend lines. Well, look at this. You've got a trend line right here. This is the XLK. Look at that beautiful trend line you could draw right there. I'll be right back. Basil Chapman, Tiger Technician Hour. We'll be able to catch.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks, we're back. So the Dow's up about 49 points. There's some very high-level consolidation in stocks like UNH, United Technologies. Boeing had a good move today. It was looking kind of toppy, and yet it's up $1.25, up near the highs. I'm telling you, this is a most interesting market. You've got some stocks stuck at the high-level consolidation. You've got you in the Dow, certainly. You've got your J.P. Morgan also at the highs. It's up 34. Nice action altogether. You've got a CVX. Now, I want you to look at this because I always get questions about it. So CVX is pulling back. That's Chevron. It's up 39 cents, but pulling back a little bit from the last few days. And you've got ExxonMobil, which is XOM, and that is up 20 cents after pulling back a little bit deeper. You remember, we spoke about this before, and now I'm going to tonight's webinar, we're going to be discussing, we're going to review how you can go through the different trend lines. Look at this. If you take this Exxon chart, you can go from that level straight down there, and look at that. You've got yourself a beautiful trend line. Remember, trend lines are very important because what they do is they set in motion a series of levels that says if it's pierced, you've broken out. And on the downside, look, this is like a falling Chapman Wave, falling X. You've got that very large, expanding, declining cone. If at any point in the next 3 months, Exxon is trading anywhere near the 98 to 99 or 100 level, there's a good chance it's going to try to retest the upside level of 102, 103 that it made back in 2014. And if it instead makes the H formation, actually the H is what I'm thinking it's going to do, and it takes out the lows of 82, 83, that support there. Then you've got an arch formation that says be careful. So we're going to be looking at patterns, what you can expect from the patterns, how they work, what has worked beautifully so far, what we are looking at. We were expecting that that the GLD would remain positive. It's up 52 cents, and that the GDX, in fact, is a little bit of a leader. It's up 16 cents, up 0.71%, and as a result, this trend line that you're looking at right there has been pierced, and now that becomes support in the 20.50 area. It's at 22.62. These are the things we'll be looking at. We've had quite a bit of success in our charts that we've looked at on a daily basis, showing the naked chart that's with nothing but the candles, then with the stochastic, then with the MACD, then putting it all together, and how to use moving averages like the 9-period moving average. And in my case, I like to use the 7-period SMA, the smooth moving average, for the shorter-term trend changes. So I'll be back a little later on today with Tom O'Brien. My charts, I'm sure, will be up, except I see the guys have all driven off. I don't know why they've driven off, and I'm not getting my network yet. So I'm sorry about that. I'm sure it'll be back on in a little while. So with that, I'm preparing to say that, is there a question? Any questions here? No questions. So as I'm looking at it right here, yeah. So stay tuned for great programming today. You've got your swim lessons. What's today? Tuesday. So today, the 10th, at 6 o'clock, I start my webinar, but we've got programming all the way through to Andy Hecht at 5 o'clock, 5 o'clock till 6. So stay tuned to TFNN. The other thing I want you to remind you is that Larry Pesavento is doing a workshop coming days. Check it out. He does fantastic. It was really terrific work, tremendous. So consider going to one of those classes. And as I'm about to sign off, I'm just hoping that this is the one day I just didn't need it, but Comcast came in and stopped the show. So I've been using a backup here, and so far, probably going out to lunch. I don't know. We'll see. I did yell at the guy to say, I need it. Anyway, thanks for being here, folks. I'll be back a little later with Tom. Otherwise, I'll see you tomorrow, and I'm sure all my charts will be working tomorrow. Today, I need them. I'll be back in a little while. Have a great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.